Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are showing us a very enhanced view of why the T-line is such an effective trend indicator with candlestick analysis. Yesterday, you could see how we had a big morning star signal that brought everything back up right to the 50. There was two elements to watch. One, we needed to see bullish confirmation today to tell us that this morning star signal worked. And two, it is not unusual after a Fed announcement, the price or the markets move great in one direction, and then they whipsaw in the other direction immediately afterwards. In that case, when we saw the markets opening lower, told us we shouldn't be buying anything and wait to see whether we should be closing out short positions. Now, this isn't anything more than just applying what normally occurs in human nature based upon reversal signals. So the fact that we sold that back off, not only below the T-line, but back below the open of all that bullish rhetoric yesterday, told us the T-line is still in effect. We're still in a downtrend. Same scenario over here on the NASDAQ. When we saw the NASDAQ opening much lower, that was obviously immediate indication that this was a knee-jerk reaction. And when it traded back below the open of the candle that told us the bulls are real energetic, when they came back down through that level, that was just visual observations to say the bears are still in control. You're still trading below the T-line. Now, that doesn't necessarily mean everything is selling off. There's a couple sectors that are working well. We recommended Valero the other day or last week because of the J-hook pattern and coming back up through this level, telling us there was more upside. We recommended, is that out of place? It is. So I'm going to go to one more real quick. We recommended BPT today based upon the morning star signal right at the 50-day moving average. Yesterday, they took it up above the T-line and the 50, telling you they were confirming. So notice what it did today. With the market off 1,000 points, this sector is still acting strong. Now I'm going to go back to this one. There is also, we recommended lithium. And this is where we use the RARE process, research analysis, reverse engineering, which basically means when there's a big price move, go back and see what the what announcement might have caused that price move. In this case, their earnings were reported, what is today? Tuesday evening, Tuesday after the close, and they skyrocketed this up into this level. So that would have told us to immediately go see what caused that big move. They exceeded their earnings. They were expected to make 14 cents. They made 21 cents. They had very strong future projections. Something like revenue of 550 to 600,000 for the year was now moved up to 755,000 to, I'm sorry, 655 million to really goofing this up. 550 million to 600 million was now moved up to 755 million to 800 million. And the fact that it's in an industry that everybody's watching, the lithium battery for automobiles, they said the price of lithium has moved up 67%. Now, I'm going into all this detail because that is the result of a RARE research. So now the analysis is that good enough to tell us there's going to be more upside? Obviously, there's a very strong projected outlook. So we recommended this on positive trading today based upon our expectation after a big price move of a 45 degree in this direction. These are the insights that allow an investor to say, I want to be buying this because of the alert that the candlestick signals provided for us, versus sitting there thinking, no, I don't want to be chasing a stock that's already moved up. This is the evidence that there's a brand new, strong bullish sentiment in this price move. We did that one. So here's the obvious. The markets are selling off. You can see kind of the dumpling top on Amazon, having a hard time getting back up above the T-line. Today, it actually gapped down and traded lower. The implication is there's still more downside. We actually bought some puts today because look at RVLV, a dumpling top, and look where the best friend gap down occurred. And then today it opened lower. That told you they weren't taking it up. They were taking it down. And what is the expectation of a dumpling top? Very strong price move to the downside. So the T-line rule is something that you can utilize very effectively to keep your emotions out of your trading. Once you see a sell signal and a close below the T-line, you can stay short. Even though there was some buy signals over the last couple of days, notice they couldn't even get above the 3 T-line, let alone the T-line. Stay short. And 2+2 analysis also includes, look where a bearish kicker signal occurred on BABA. Right here at the 50-day moving average. What do you think everybody is watching? They're watching to see what's happening at this resistance level. Now you've got a bearish kicker signal, which is one of your strongest reversal signals. This becomes an extremely high probability short trade because the market's not above the T-line, and because this one did a kicker signal failing at the 50, closing below the T-line, stochastics heading down. Where's your next likely targets? Down in this range. So as long as the indexes continue to trade below the T-line, no matter what all the talking heads tell you on what their projections are, that we are nearing a bottom, blah, 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 let the market tell you what's going on. Right now, you want to stay short, and any long positions that have very compelling reasons to stay long. That'll be it. We'll see you in the chat rooms.